Hi everyone, and welcome to this week's version of your commodity futures update. It is the close of the day, March 12th in the US. I am Mish Schneider, Chief Strategist of MarketGauge.com. And so we had our numbers come out today on CPI, and yes, they were a little bit elevated. And it was an interesting immediate reaction, which is why immediate reactions aren't always the reaction, just the immediate reaction. But I think a couple of the takeaways from it are that the market still seems to anticipate a June cut no matter what, even if inflation looks a little stickier. In the areas that it looks stickier, some people are convinced, though, that it's not really going to get much worse, that sort of transition thought. And even though gold pulled off from the all-time recent highs, it didn't really do that badly. Silver did some consolidation, as did the gold miners. And we're going to talk a little bit about a couple of the components in DBA, which has made new all-time highs. But on top of that, we continue to see green in the S&P 500, which you're looking at right now, in NASDAQ, in the Dow, and obviously some of the growth stocks, NVIDIA being at the top of the list. So at this point, really, it doesn't seem like, other than an initial reaction, the market is ready to quit what it's doing, which is continuing to go up. And that's the evidence we see here in this chart. This is SPX. And when I talked to you last week, we talked about these reversal patterns, but they need to do something, and they get negated. When I say do something, they have to have about a 10% correction, at least, if they're really going to prove to be anything other than choppiness. And this is certainly what we're seeing here. It gapped up, a little bit of a correction, up 3 days. A little bit of a correction, kind of a wonky day here. This was on Friday when it sold off hard. Not much follow through on Monday, and here we are Tuesday, looking like we're ready to take out the high here. Once again, at 5,189 and change. So I saw the most interesting chart today, which was really basically showing all these points of consolidation and accumulation, and how that is a stepping stone to the next rally. And his projection on this particular chart was at 6,100 in the Dow, in the SPY, which, of course, why not? Right? So for tomorrow, really immediately as you're looking at this video, the high that we had from yesterday, which was at 51.24, that's going to be your pivotal number. If you notice, today's low was a little bit lower than that, 51.14. So this was kind of a doji day, so I would say anywhere between 51.10, 51.14 to 51.24, anything above that, I would maintain a bullish bias. And if we break down below that, then of course I would start to think that maybe this couldn't get through this high from a couple of days ago and needs to take another trip down to see what kind of buyers we have down here. But clearly, if you look at the real motion indicator, you can see that we didn't really have a strong mean reversion. We had a little teeny bit of a mean reversion, but it was more borderline. And now here we are back above that Bollinger Band and above the 50-day moving average. So at this point, still looks pretty good in the S&P 500. So now taking a look at gold, we can kind of have a similar story, except for the slight parabolic move that we had once we got through that 2040, 2060. Remember, we talked about that level, said once you get through 2100, just hold your nose and buy. And clearly from 2100, we've gotten to move up to this high here at 2203. So after we made that new all-time high, we had an inside day, and today we followed through with a little bit of downside. However, I wouldn't get too concerned about it, because the low on this day was 2161. And we closed today at 2161. So that means that we didn't necessarily break down for a classic reversal top, where we would have had to close below the low of the day that it made the top. So what this really means to me now is we have to look back at this level here, which is at 2152, and say this is really going to be ultimately our support. We can get down there, even if we break it briefly during intraday and get back through it. So let's use 2152 as a sort of underlying support level with a bias remains positive above. And if for some reason it breaks it, I wouldn't get too hysterical, but I would say then at that point, 21.15, 21.20 are two key areas of support. And as long as we hold above that 21.52, and more importantly, above that 21.61, which is where we closed and what was the low from 2 days ago, then we could probably make a case for the fact that gold could consolidate for a while and continue to work its way higher. We still think overall gold hasn't even gotten close to its ultimate target, which would be anywhere from 2,400 to 2,600, with a possibility down the road of 3,000, but of course that would mean that things have really gone awry. Two other factors to watch with the gold, of course, is going to be what happens with the long bonds. So keep your eye on the long bonds. The yields tightened a little bit with that CPI number. And number two is what happens with the dollar. That also went up a little teeny bit, except that it still managed to close under 103. So with that, let's look at the dollar yen. Well, we were certainly right last week. I told you that we had been in this period of consolidation in the dollar yen, and that once it broke down, we would probably see a much bigger move lower. Initially, it stopped at the 50, but the next day it broke down under the 50, had a little bit of a consolidation the next day, and today it made a pop because it got a little oversold and it also held the 200-day moving average. But the most important thing was that I think we have basically what we can consider to be really heavy-duty resistance around that 149.30 level in terms of the dollar yen. And unless it really clears back over that, we can then say, okay, the dollar is getting stronger. We would continue to be more of a seller of rallies. So the first much closer area of resistance to keep an eye on would be right at this 50-day moving average. So if we get through there, obviously we can start to actually think about that pop up closer to 149 or 149.30. And if we can't get through that 148 level or that 50-day moving average, which really is more like 148.16, 148.20, kind of corresponds with the high of today, by the way. Notice how that looks so good, 148.16. If you think these moving averages aren't being watched, here's a perfect example of how it is being watched. We can't break out above that. Then we have to look now to see what happens closer to this level of support at around 146.94. And if it breaks 146.94, that's probably pretty bearish for the dollar, bullish for gold, as we were just saying. And then, of course, the next area we'd be looking at would be right here at the 200 at 146.24. If we just take a moment and look here down at the real motion, it's interesting because the momentum was dying. We talked about that we saw a bearish divergence in the dollar versus the yen. And then it broke down under the 50. And look, this too in momentum held the 200. Quite not at a mean reversion point, so that would be something else to watch for in terms of the momentum, is if we get this little bit of pop here and it looks like we're going to take out that 50-day moving average, I would imagine that there'll be a corresponding with a mean reversion as well. So here we are a week later and still waiting for that close in crude oil above $80 a barrel. We pierced it a couple of times intraday last week, but we were not able to close above, so it's no surprise that this would try a little bit to the downside, but it's still very much in a trading range as far as I can see, and I wouldn't really believe otherwise unless it broke down under this 50-day moving average, which comes in roughly at about 75.61, so that 75.50 level. I think that's really important to keep in mind. But in the very near term, with this chopping around here, as you can see, yesterday it kind of had a down day, came all the way back. So today it opened higher and wound up closing down. This is the kind of indecision that we're seeing in oil, because nothing really suggests that oil should be negative. There has been, demand has been relatively robust, and supply, even though OPEC agreed, Iran did not agree. So that's part of the reason why this went down today. But overall, we're looking for some kind of reconciliation between the trading range, either above 80 or below 75.50. So for tomorrow, just to take it real near term, we've got 77.96, let's just call it 78, where the 200-day moving average is above. I would think more bullish, below, maybe slightly more negative. If we hold above it, then I would say you could see pretty clearly here that we've got resistance coming up at around 78.60. We get through 78.60, then of course we'll start looking back at it around 79.15, and so on until we get back to that 80. And on the downside, if we cannot get through that 78 and we start to break down, say, under 77.10, then I would start to think that we would get more selling pressure. Even today's low would be a factor to look at, 77.34. So that might bring it down to 77.10. We break down to under 77.10. Of course, then we're looking at 76.40, and then so on until we get down to its 50-day moving average. The real motion indicator has had a bona fide mean reversion that happened, so that's also something to be wary of. We don't see any bullish or bearish divergence. It's in line with price, but nonetheless, the momentum has really been sort of chopping around just as the price has. And last, I want to leave you with a look at two of the heaviest weighted components of DBA, which I had mentioned in the beginning made new all-time highs in the last couple of days. That is the agricultural ETF that has 10 different commodities in it, but the two heaviest weighted ones are cocoa, and then after that would be cattle. So looking at this cocoa right here, I mean, this is another really great classic example of kind of what I'm trying to show you in gold, which is you've had this big parabolic move, a little bit of a sell-off, but because there's still, in terms of the fundamentals, nothing changed as far as shortages of cocoa, we went right back now and made a new all-time high today. So would I get concerned about this move being over? No, probably not, unless it broke $6.68. The point is that what DBA is telling us, cocoa is telling us, and possibly gold is telling us, is that even though inflation is not necessarily where it was, say, in 2021 and into 2022, we could be heading back into that point. And the other chart, the secondly heaviest weighted chart in DBA, is live cattle. And even though it doesn't look like the cocoa chart, what's interesting, this is the April contract. What I showed you in cocoa, by the way, was the May contract. But if you're looking at this contract right here, what you can see is another amount of sideways action. So this is above the 50. This is in a bullish phase. And as such, really basically what it looks like to me is one close over, let's say, this high right here, which is at 188.87. One close over there. If you take just all the sideways action here in terms of how far and how much this could thrust forward, I would think we would be looking at not only filling this gap right, if you look to the left here, but possibly going up to around 195. But again, that'll also bring DBA still as a point of looking at it. So even though food inflation looked down in the CPI reports, it depends on where you're looking. Okay, that's it for now. Thanks so much for watching. I'll talk to you again all next week. Bye.